In crypto, some scams weren't just schemes, they were financial catastrophes that erased fortunes, shattered trust, and rewrote the history of digital finance. Today, you're about to uncover 3 scams so massive they stole tens of billions, fooled millions, and destabilized entire markets. Yet, most people still don't understand how they actually worked. These weren't small rug pulls. They were engineered empires built on charisma, hype, and the most dangerous currency of all, belief. They didn't just steal money, they hijacked logic, exploited emotion, and weaponized FOMO in a way the world had never seen. So ask yourself, what kind of deception can seduce millions across continents? What mechanism turns a simple idea into a multi-billion-dollar illusion? And most importantly, would you recognize the next one before it targets you? In this video, we're going deeper than the headlines. We're exposing the structure of these 3 colossal scams, one built on impossible returns, one on a global cult of belief, and one hidden inside a company people trusted more than their own wallets. And we'll do it without revealing their names up front, so the pieces fall into place one by one. More importantly, you'll learn the red flags, psychological traps, and invisible tricks these empires used, because the next great scam won't look like a scam at all. It will look like an opportunity. By the end, you won't just know what happened. You'll know teched up how to protect yourself from the scams that are still coming. 1. The lending mirage. BitConnect's impossible promise. Imagine a world where you could earn a guaranteed 1% daily return on your investment, day after day, week after week. Sounds like a dream, right? For thousands of eager investors, BitConnect offered exactly that. Launched in 2016, this platform promised to revolutionize finance with its lending bot and native BCC token, swearing it could generate astronomical profits by trading Bitcoin volatility. People were pouring in, drawn by the allure of compounding interest that could turn a modest investment into a fortune in mere months. The mechanism was deceptively simple. Users would convert their Bitcoin into BitConnect coin, BCC, then lend that BCC back to the platform. In return, they were promised an average daily interest of around 1%, plus an additional bonus depending on the loan amount and duration. This meant that a $1,000 investment, theoretically, could balloon into over $50 million in just 3 years, if those rates held. At its peak in December 2017, the BCC token itself reached an astonishing price of nearly $471, boasting a market capitalization of $2.5 billion, making it a top 20 cryptocurrency globally. The platform even had a multi-tier referral program, rewarding existing users for bringing in new blood. A classic hallmark that should have raised immediate red flags for any seasoned investor. But behind the facade of innovation and community, BitConnect was nothing more than a textbook Ponzi scheme. New investor funds were directly used to pay off earlier investors, creating an illusion of profitability. There was no real trading bot generating those returns, just a continuous influx of fresh capital. Despite growing skepticism and warnings from prominent figures in the crypto space, the hype machine roared on, fueled by aggressive marketing and the sheer magnetism of guaranteed daily profits. Many ignored the signs, captivated by the promise of easy wealth, failing to recognize that such unsustainable returns are mathematically impossible in any legitimate market. The inevitable collapse arrived swiftly and brutally. In January 2018, faced with cease and desist orders from state regulators in Texas and North Carolina for operating an unregistered securities offering, BitConnect abruptly shut down its lending and exchange platform. The value of BCC plummeted by over 92% in a single day, collapsing from its peak to less than $1. Investors, who had locked up billions of dollars in the scheme, watched their portfolios evaporate. The U.S. Department of Justice alleged that BitConnect defrauded investors of $2.4 billion, though estimates vary. Its founder, Satish Kumbani, vanished and remains at large, while a lead promoter, Glenn Arcaro, pleaded guilty to conspiracy and wire fraud, agreeing to forfeit millions. The story of BitConnect serves as a stark reminder: if it sounds too good to be true, it almost certainly is. But what if the mastermind behind an even larger, more elaborate scam simply disappeared, leaving authorities with no trace? 2. The Empire of Lies, OneCoin, and the Vanishing Crypto Queen. Our next tale of deception takes us into the shadowy world of OneCoin, a global phenomenon fronted by the charismatic and seemingly brilliant Dr. Ruja Ignatova, famously known as the Crypto Queen. From 2014 onwards, Ignatova, a Bulgarian-German entrepreneur with an impressive resume, including a European law degree and a stint at McKinsey & Company, captivated millions with her vision of OneCoin becoming the Bitcoin killer. She promised a financial revolution, selling educational packages that purportedly taught investors about crypto trading, while secretly being the entry point to her fraudulent scheme. OneCoin wasn't just a small-time operation. It leveraged a sophisticated global multi-level marketing (MLM) network, enticing members with referral commissions to recruit even more victims. From Europe to Asia, people from all walks of life invested, drawn by the Crypto Queen's polished presentations and the promise of astronomical returns. The project claimed to have its own blockchain, but in reality, no such decentralized ledger existed. OneCoin was a centralized database, completely controlled by Ignatova and her team, faking transactions and giving investors the illusion of a legitimate cryptocurrency. The scale of the fraud was staggering. OneCoin is believed to have defrauded over 3.5 million victims worldwide, collectively losing more than $4 billion. Countries like the UK, Germany, and China saw massive losses, highlighting the global reach of Ignatova's deception. Despite growing warnings from financial authorities and increasing withdrawal issues for investors, the hype continued, fueled by a relentless marketing machine. Then, in October 2017, just as international investigations were closing in, Dr. Ruja Ignatova boarded a Ryanair flight from Sofia, Bulgaria, to Athens, Greece, and vanished without a trace. To this day, the Crypto Queen remains one of the FBI's 10 most wanted fugitives, with a reward of up to $5 million for information leading to her capture. Her disappearance left a void of billions, a chilling testament to how easily a compelling narrative and a charismatic leader can manipulate the masses, even with a fake blockchain. While her co-founder, Carl Sebastian Greenwood, was sentenced to 20 years in prison for his role, Ignatova's fate remains a mystery, with some reports even suggesting she may have been murdered. The OneCoin saga proved that even without a tangible product, the illusion of one can be enough to build a multi-billion-dollar empire of lies. But what happens when the very institutions we trust to hold our crypto betray that trust from within? 3. The billion-dollar betrayal, FTX, and the fall of a crypto king. Our final shocking scam brings us to a more recent and complex betrayal, the spectacular collapse of FTX, once hailed as a titan of the crypto industry, and its charismatic founder, Sam Bankman-Fried, or SBF. Celebrated as a prodigy and a poster boy for crypto, SBF built FTX into the world's third-largest cryptocurrency exchange, boasting a peak valuation of $32 billion and attracting celebrity endorsements from figures like Tom Brady and Larry David. He projected an image of altruism, promising to make billions to give it all away, charming politicians and investors alike. However, beneath the veneer of innovation and philanthropy lay a web of deceit. FTX's downfall was intrinsically linked to its sister trading firm, Alameda Research, also founded by SBF. In November 2022, reports surfaced revealing that Alameda Research was deeply insolvent, having borrowed billions in customer funds from FTX to make risky investments, cover its losses, and fund lavish lifestyles, including luxury properties. This commingling and misuse of customer assets is a fundamental breach of trust and a blatant act of fraud. When a liquidity crisis hit, triggered by a mass withdrawal of funds by worried customers, the entire edifice crumbled. Within days, FTX filed for bankruptcy, and the true extent of the fraud began to unravel. Estimates indicated that around $9 billion in customer funds were missing, leaving thousands of investors in limbo, many losing their life savings. The impact rippled across the entire crypto market, shaking confidence and reinforcing the need for stringent regulation. Sam Bankman-Fried was arrested in the Bahamas in December 2022 and subsequently extradited to the U.S. In November 2023, he was convicted on 7 counts of fraud and conspiracy, and on March 28, 2024, he was sentenced to 25 years in federal prison, marking a dramatic and definitive fall from grace for the crypto king. While recent reports from May 2024 suggest that FTX's bankruptcy estate expects to recover sufficient funds to repay nearly all customers their owed money, plus some interest, The initial shock, the scale of the alleged fraud, and the blatant betrayal of trust still make this one of crypto's most shocking sagas. The fact that a seemingly legitimate and high-profile exchange could operate such a scheme under the nose of so many sophisticated investors highlights the critical importance of due diligence and understanding where your assets are truly held. But how do you, the everyday investor, spot these subtle and not so subtle red flags before it's too late? Sharper. The red flags you missed, and how to stay safe. All three scams you just saw had one thing in common. They manipulated human emotion, greed, FOMO, and the dream of quick wealth, and the results were brutal. In 2023 alone, Americans lost $5.6 billion to crypto scams. That's a 45% jump in a single year. So how do you protect yourself? 1. Unrealistic returns equals scam. If someone promises 1% daily or risk-free profits, walk away. Crypto is volatile, nothing is guaranteed. 2. Zero transparency. If you don't understand how the project makes money or the team is anonymous, it's a red flag. OneCoin didn't even have a real blockchain. 3. Aggressive marketing plus FOMO. Buy now. Limited time. DMs from strangers. These are classic scam tactics. Even celebrity endorsements can be fake. 4. Withdrawal issues or extra fees. No legit platform locks your money behind surprise charges. To stay safe, DYOR. Read the white paper, verify the team, check audits, use cold wallets, never share your seed phrase, and trust your instincts. If it sounds too good to be true, it is. But here's the real question. As scams evolve, what comes next, and how do you stay ahead of the next wave of crypto deception? The enduring battle and your vigilance for tomorrow. The stories of BitConnect, OneCoin, and FTX aren't just relics of crypto's past. They're warnings for its future. They reveal a world where innovation and exploitation race side by side, and where even the most trusted platforms can hide the deepest frauds. Regulators may be catching up, but accountability ultimately rests on you, the investor. Crypto's decentralized power is also its greatest risk. Once funds are stolen, they're often gone forever, making prevention your strongest defense. The FBI's 2023 report says it plainly. By the time a complaint is filed, the damage is usually done. And scams are evolving. Deepfakes, AI-generated impersonations, and algorithmic social engineering are becoming standard tools for criminals. Staying ahead means questioning everything, diversifying your portfolio, protecting your keys, and never letting FOMO override logic. The road to financial freedom in crypto is real, but so are the traps. Learn from these billion-dollar failures, recognize the red flags early, and protect your future before someone else profits from your blind spot. Stay sharp, stay skeptical, stay safe,